following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
TFNN. Welcome to the August 30th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in right now, 877-927-6648. Of course, if you can't dial on in, you can always send me an email, steve@tfnn.com. Just in that heading, put radio show question, of course, inside the Tigers Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 25 points at 21,889. S&P up 10 at 2456. NASDAQ 100 up 55 points. That's almost 1/10. That's almost 1% to the upside. Russell 2000 up 0.5%, 6 points and change. The semis are up about 1/10%, $12 to the upside. New York Stock Exchange green, composite green, Wilshire green, trannies green. Volatility index back 56 pennies, trading at 11.14. Gold off $5. Silver's flat, down 3 pennies. Light sweet crude flat, up 6 pennies. To the charge, lead the charge here to the upside. It is Regeneron Pharmaceuticals up $16. Universal Display, that's OLED. That's got about a 12% move to the upside, $13 and change. Amazon up $12.60. Bluebird Bio up $12. Marietta up 11 1/4. Biogen up about 11. Insight up about 11. NetEase up about 11. To the downside, it is Autonomy. OTIC, down $17 or 81%. Yikes, no idea what that is. Dicom Industries, not the Daikon radish, but the Dicom Industries down 8% or $6 and change. Juno Therapies down almost 6% or $2.50. Puma Biotech off 2.5. Medicines Company down 2. The first question that has come in for this morning or this afternoon is if we could go take a look at the yen. So let's go take a look at now this is going to be a 15-minute delay on the actual Japanese yen US dollar currency pair. But the exact signal that it generated up at the highs on July 11th. Well, first thing, let's step back here for a moment. Let me just widen the screen just a tad. What I mean is let me turn off the volume bars. There are no volumes here. So it just makes it a little bit larger. Now, and if you're not watching us on Tiger TV, I'm going to describe to you what we're looking at, which is nothing more than your good old consolidation pattern out here. 114-ish is the top of the consolidation. 108-ish is the bottom of the consolidation. Now, the signal up at the top of the consolidation, that was a test of a prior swing point. This is why we always take a look at swing points for our targets. We take a look at other areas, most certainly. We do retracement levels. But when you're in a trade, you're always looking at the ultimate target as being the prior swing point out here. Not that it can't bust them out, but that's what you look at. Well, in this case here, there was a key reversal session inside of the Japanese yen that formed on July 11th. Now, that date on July 11th, when I saw that signal out here, that is when subscribers and I went long gold. Because of the correlation that exists between the yen and gold, that is what we decided to do. That turned out to be a very good trade. I don't know, 3-to-1, 4-to-1, 5-to-1, something like that. on a reward to risk. Now, yesterday's candle session, really the exact same thing. Now, key reversal session, what is required there, first of all, the market needs to be extended. So when you take a look at the run inside the yen from June 14th to July 11th, that was an extension getting all the way back up, making that 100% move. If we take a look at what the yen has done from the highs of July 11th down to the prior swing point, which was on June 14th, again, to me, that qualifies as an extended market. That's number one. Number two, what you need to see is the high and low of the prior session pierced, taken out. And the third thing is you need to see, in this case here, you needed to see at least a green-bodied candle. Doesn't matter how small or how large. In this case here, it was mucho grande. So we do know that there is a substantial amount of support in the 108-ish area. Now, having that key reversal, having a couple of other bullish candles down here. Here's a bullish engulfing on August the 12th. You've got this little morning star candle on August 14th. This is really strong support. Now, the beauty there is if that support ever fails, that'll send a significant message to you. But at this stage of the game, what you would have to assume and what you would have to identify as a target, is going to be the top of the consolidation, 114.37. So, Danny, the information that you and I have right now is that over time, we should see the yen head up to 114.37 or somewhere in that vicinity. Now, folks, I throw this question out to you. If you buy into this, if you see what I see, then what is it that you think gold should do? Because you see, there was a nice bottom in gold out here when the yen started getting stronger. Now it's getting weaker. It goes in the opposite direction when we look at the currency pair out here back on July 11th. Exactly. So there is a strong possibility. We're not there just yet. We don't have the proof just yet. We'll go take a look at what that proof looks like. But at this stage of the game, unless this correlation has just simply gone schizo, has come unglued out here, has come undone, as the guess who might like to say, well, guess who's coming for dinner? It is probably the bears that are coming in and going to take a look at, take gold apart. Now, we're not there yet. We did get a TD sequential count, number 13. You'll see the blue 13 on yesterday's candle. But what is required out here for Goldilocks to entertain the three little bears out there is you're going to need to see it close back inside its consolidation. That's that red line right around the 1307 level. Let me get rid of this. Sorry about that, folks. This is here in the chart. There we go. So around the 1307, but the real number to be paying attention to is going to be Stevie's red line, 1304.60 as we speak right now. Not until you see it close below Stevie's red line can you really say that the Goldilocks sent out the invitations for the three bears. Not until that moment in time, even though we're getting clear signals inside of the yen. 1304.60, that number is going to change, over the next day or so. But watch that, we'll call it 1304 level. You get below that, and what we saw a couple days ago, yesterday, as a matter of fact, was nothing more than a great big blow off top. It's not there yet, but keep your eyes glued to Stevie's red line on that daily gold chart. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. That last thing here, if we take a look at the metals out here, let me do this. I'm going to change it from a candle chart here just simply to a line chart. And we take a look at the silver. You can see the beautiful wedgie, the snow cone that silver is trading in. It has not busted out. So it just simply, is silver sending you and I a message? Certainly the yen is sending you and I a message with regard to the metals out here. Korea or no chick Korea out here. So just simply be careful. Watch Stevie's red line, though. That is going to be the key level to be watching, just simply to confirm what you and I were just looking at inside of Goldilocks out there on the daily contract. Now, another question has come in. If we could go take a look at Amazon. There wasn't a whole lot of feedback or question with regard to what you're looking at there. Maybe you could post that inside the den. I don't recall who posted it. But let's just go take a look at Amazon, see what it is that we see out here. We'll look at the three different time frames for this equity. We'll take a look at the daily, the weekly, and the monthly. The daily's on the left-hand side, and the blue horizontal lines out here are your TAS market profiles. The weekly is dead center, and off to the right is the monthly chart. We'll start with the daily chart out here for Amazon. You've got a nice little bullish reversal signal yesterday. You have follow through today. There's no pattern that I see out here. Well, let me hold on a second. Hold your horses. I say there's none, but we need to go back and take a look at the maybe the wave count on this way down here. No, you only got to letter F right here. And that was yesterday's low. But a nice bullish engulfing candle here. I'll put this chart up on our screen so you can take a look at it. And you do have price now being above Stevie's red line. That tells us the price oscillator has turned up. This tells us there's either a counter trend rally going on or a bounce. And with regard to the counter trend rally, what we will pay attention to is that TAS daily profile high. So here's what we know. This little junior swing point out here that's sitting right on the trading session of August 15, 2.5 million shares. You've done 1.7 today. That is the target for Amazon. The top of the daily box out here is at 987.11. We can also see that the profile that Amazon is trading within, which formed 2, 4, 5 days ago, 6 days ago, we can see that this is a bullish structured profile. What that means is really the buyers are the ones in control of the price area from 950.09 to the 987.11 area. So Amazon should be able to take its way up to 987.11. Now, if it can get above that, let's go take a look at the weekly set of profiles. Well, you know what? At 977.80, that's going to be resistance. So it's between 977.80 and 987.11. That is the target for Amazon. Closing above 987, closing above 977, boy, that would give you the nice bullish outlook. If we take a look at the monthly chart out here, let's go take a look at Stevie's chart. Let's just change this to a monthly time frame out here. See what we've done here for the month of August. And what we've done, we've got one more day left in August. All that Amazon has done is come down and test and reject Stevie's red line. Yeah, you've got a little bearish engulfing candle. That would set up resistance at last month's high in about the 1,080 type area. Well, I can give you the exact number. I should give you the exact number. That would be at 1083.31 out here. But we don't know how tomorrow's candle session is going to complete or even today. So this may not even turn out to be a bearish engulfing candle. What we do know is on a monthly basis, price came down to support, tested it, and rejected it. So Amazon, over the short haul, should continue to move higher. We've got a request here from John in Sarasota, and John's question was specifically, hi, Steve. Hi, John. Is this the bottom for corn? Well, let's go take a look at that corny one out here and see what it is that we can see. Now, I believe it was somebody in the den, might have been Danny from Atlanta in the den. And one of the things that we had done, John, was we were taking a look at this daily chart here for the December corn futures contract. And what we had identified is the likely next price target for corn was in the 343 area. Now, we're trading right now about 345. It's only the first price target on the way down. Because if it is able to bust through that, that was the 1.272 expansion, then it moved down to 323, would be the level that you would be watching. So it's possible. It's heading to a targeted area. And what we would want to see is we would want to see some type of bullish reversal out here. Now, it's going to be easier for me to go ahead and change this chart here from a bar chart to a candle chart. Go ahead and turn off that little Taz Vega out here. And when you and I look at this, there is no bullish reversal on a 60-minute time frame for corn. And what corn could do is it could bounce here, bounce up to the 347 level, turn back down, which is the bottom of the 60-minute profile. But let's go down to a shorter time frame. Let's go take a look at a 30-minute chart out here. Do we see a reversal? Do we see a bottom? Here's what we see that's taken place during the 1 to 130 time frame, which is 123 right now. You do have a 30-minute profile that is formed. This has a bullish structure. That's really important because if price is able to close below the low, we'll call it the low of today's session, it's going to go hit that target of that 1.272 expansion, and below that, the 1.618 level. Now, just because you see corn bounce to 347.7 out here, 34.77, doesn't mean that you've got a turn. You now have a 30-minute bullish structure that says that really buyers and sellers, or at least buyers, want to try to push it up into that level. So I don't see the bottom necessarily with corn having done what it's done on the daily chart out here. I would wait, John, because I don't know what you're trading. If you're trading the futures contract, if you're trading an ETF behind it, I would wait for some type of cavalry signal on the daily chart for corn. That was the December contract out there. I don't see any other questions. Oh, Phil has sent in a question. We've got one. CVNA is the ticker symbol. So let's go run over to our three-pronged chart. Let's go take a look at CVNA, and then we'll read the email. Hi, I'm in CVNA from 11, took partial profits 23. Hey, congrats on that trade. Held about 60% of the position. Thinking of adding back here at around the 62% retracement level. So let's go take a look at this equity. And let's first, this is an equity that began trading, looks like, back in April of 2017. So we're not going to be able to glean any real information off of the weekly or the monthly chart. So we're going to be forced to just simply take a look at the daily and try to go ahead and make heads or tails out of it. CVNA. And, of course, I've just repeated that so that on my other chart I could type in the right thing and we could see what other kind of daily signals might be out there. And let's just go ahead and pull that chart over at the moment. And hopefully my price will catch up to the 17.25 that it is trading at. But if we take a look at the actual, let me take a look at the swing point high out here for you, Phil. And this is do our wave count to the downside. Yeah, just a fourth wave to the downside. The positive here is that yesterday and now today, you've got a second day where price is trading above Stevie's red line out here. On the daily chart, we can see that price, in fact, is above resistance. So that's a beautiful thing. Where's the next price target on this? So your next price target, you'd have to say, is probably this little junior swing point from August the 8th. This is Steve Rhodes with TFNN. We'll finish off taking a look at Carvana Company when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 35. S&P is up about 12 points. So, yeah, Phil, taking a look at the CVNA chart out here, you're in this thing for a profit. You've sold it. You've taken profits and stayed in a position as this thing moved down. I don't see any reason for you not to add back that position out here. What I would be focused on, as we said, was the swing point area from August 9th, just an initial target level. You do have a little gap to the downside that occurred out here on August 1st, but if price is going to make it all the way up there, it's likely going to make it back to its swing point highs in the 22 level out here. You're going to want to watch this price oscillator. You're going to want to watch what happens when it gets to zero, should it get to zero, and then really the test of Stevie's red line at that point in time. But as we speak right now, nice trade, nice sell, and yeah, go ahead and add back CVNA. We had some requests out here that have come in during the break from Suman. Suman wants to take a look at two equities. Hal is one of them, so that would be Halliburton. So let's go ahead and take a look at Halliburton. We'll punch it in on chart number 2. We'll come back over here to take a look at our 3 time frames and see what Halliburton is doing out here. See if there's any signals. Now, in the case of Halliburton, I wanted to check if they have bottomed. Okay, so that's the question out here, to see if they have bottomed. So as we take a look at Halliburton, just been a straight shot to the certain extent to the downside ever since the high on January 26, up in the 58.78 level. Now, from a daily perspective, here's what you've got going for you, Suman, and that is that price is trading right now inside of a daily profile that formed out here on August the 24th. This is a profile that has a bullish structure to it. This says that price ought to get up to $40. That's the first thing that we're looking at. Doesn't say it'll take it out, but says it at least should get up to $40. Now, if it could clear the top of the box, there may be a new box set for it, but at this stage here, we're going with the current box. If price were able to close above the $40 level, then it says, hey, maybe there's a possibility. Of course, on this trade here, if you were going to take it, your target, in this case here, I normally say the swing point, July 20th, but because of that volume to the downside on July 24th, you have to expect turbulence if you were to take a long trade here. And that's between 42.02 and 45.30. Now, you're at 38.38. Your stop would need to be below the low of August 18th. That would be 38.18. So just simply do the reward risk to determine whether or not you want to go ahead and make a trade. What's missing from this equity, though, Suman, I don't know the time frame it is that you're looking for. If this has bottom, it hasn't really built up much of a base out here, but let's face it, it does have support based on its daily market profiles. We'll go take a look at the weekly in a moment. But what you're missing from this trade is for a lot of other folks to believe that it's bottomed so that you see some type of sign of strength. There's no sign of strength here. Price hasn't taken out resistance. That's $40. And there's no volume surge off of the bottom out here. So is it a possibility of a trade? Yeah, sure. Depends on your risk reward. If you're asking me, is this a bottom because you've seen some other sign or signal or pattern out here, the answer is no, we haven't seen that. If I take a look at the weekly chart here for Halliburton, you're going to see it's down below any profile level out here. There's no bullish reversal signal. If anything, Suman, what this is giving to you and I, let's go check out and see what the A to B equals CD pattern might be. And let's take a look at the B point, which was the week that began May 1st, 45 million shares, taken out with 69 million shares. So intermediate term time frame, this says the work is not complete to the downside. And this says that Halliburton should head down to about 33 1/4. That's your 1-to-1 A to B equals CD. Now, if it's going to get down there, what it's probably going to do is get all the way back to that weekly hammer candle from January of 2016, January 18, 2016, that had 70 million shares out there. So if you're looking for the long-term signal, it ain't here yet. And you've got a confirmed A to B equals CD to the downside. In the case of the monthly chart out here, there's no A to B equals CD to the downside. There's certainly no reversal, and there's every signal here that price wants to get back to that swing point from January of 2016. About 278 million shares down there. Right now, you're only trading at 157. So daily says expect a little counter trend rally up to the $40 level. But no, does not look like a bottom just yet. And that is ticker symbol HAL, Halliburton. Suman also wanted to go take a look at SAVE. SAVE is what? Spirit Airlines, I believe, SAVE. So let's go take a look at Spirit Airlines, see what it is doing on a daily basis. And Suman, all you and I need to do is just punch up this chart. We don't need to look at anything else other than this set of charts. Because we take a look at the daily, we take a look at the weekly, we take a look at the monthly set of TAS market profiles, you're going to see that price is trading below all of them. There's certainly no sign of strength off of the daily chart over the past couple of days. So in your quest for, has this found a bottom, we're going to ring the bell and say, no, it has not. Not that you or I can see. Now let's go take a look at the markets. I'll check the emails in a little bit here. But you might be asking the question, hey, Steve-O, what are the markets doing? So let's start off and take a look at the advanced decline oscillator readings. New York Stock Exchange, that is the lower left-hand panel, and it is above zero. Reading right now about 28 and change out here. That says that buyers are actually the ones in control of the New York Stock Exchange. Inside of the NASDAQ composite, that texture, and you know, when the bottom formed out here, we know what this did with this advanced decline oscillator reading. That's the bottom panel out here. It was making lower lows in price and higher highs with regard to that oscillator reading, both inside the New York Stock Exchange and inside the NASDAQ composite. Not oversold. The Dow is playing games. The Dow is saying just not so fast out here. You can see its advanced decline oscillator reading is at a minus 0.46, so it's not yet above zero. However, if we take a look at the volatility index, we'll go ahead and explode this screen up on our chart out here. What you're going to notice, or you could notice, is simply that the volatility index is back below, as we speak right now, back below 1144. Now, that 1144 is a 50-day exponential moving average. We're trading at 1107. You close below 1144. We're coming into a holiday week. You've got light trading out here. There's no reason for the market to not continue to drift higher out here. And higher? Perhaps until the volatility index gets down to that 955 level. That's quite a large move. But we've got Thursday, we've got Friday out here, and that's the way that the markets are trading and taking a look at that set of tools. Now let's go take a look at some of the daily charts out here for each of these indices. Let's go see if we can get a read for the signals that they're providing to you and I. And what do you want to start with? Let's go back to that NASDAQ composite out here. If we take a look at the NASDAQ composite, what you've got today is a clear move above Stevie's red line, 6309.36 out here. You have a Gartley buy. That was confirmed with that little gap to the upside on my chart called the rising window. Was tested with yesterday's bullish engulfing candle. We know that every Gartley buy pattern has 5 different potential outcomes. So let's go measure those outcomes and see where it is we're at inside the NASDAQ composite. Not that you can trade it, but boy, it's a helpful piece of information. You can see you're already above outcome number 2. Outcome number 2 being 6351.82. That's your 0.618 retracement. NASDAQ composite, it's clear to you. It's clear to me. It's headed to outcome number 3, which gets it right inside that swing point from July 27. So it's headed next to 63.99. Most likely 64.59, and you never know. This could turn into outcome number 5. Nothing more than your A to B equals CD to the upside. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to God's country for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So a couple questions during the break that came in. Danny Atlanta wanted to take a look at the commercial position of gold traders out here and silver. I only have the gold all completed here, Danny. So this will just simply have to do. Now, we're taking a look at this chart here. The very bottom panel takes a look at the CFTC COT data for commercial traders and just specifically looks at what the commercial traders are doing as a percentage of open interest. And you'll see a couple of red down arrows. Those were the two most recent highs. This is a weekly chart, by the way, that we're looking at inside of gold. The two most recent highs, down arrows, inside of Goldilocks, and the levels based on where commercial traders were at. And we're basically right up. This is as of last week. This data is as of the Tuesday prior. So, for example, Friday's data, when it comes out, will be as of yesterday. Doesn't tell us what took place in between that. But what we can see here is that commercial traders have been elevating themselves to what we'll call a more net short position. They're always net short. The question is just trying to analyze it based on previous net short positions out here. So the combination, Danny, of that key reversal session inside the yen, what it is that we're seeing here inside commercial traders is the reason why and we'll call the TD sequential count inside of gold is the reason that we want to pay such close attention right now to the 1304 and change area, Stevie's red line. Because if you get below that, that's a real good indication that it was nothing more than just a blow-off top out here. That's what the charts are communicating to you and I. I don't have the silver. I do remember looking at silver figures, and it wasn't as definitive as it was with regard to Goldilocks. Mick inside the Tigers Den wanted to take a look at the ETFs out there, the IWM, the Qs, and so on and so forth. So let's go take a look at those four. And what Mick was asking for was simply the resistance levels. So, Mick, if we're just simply going to take a look at these, we've got both the daily and weekly profile levels out here for the spiders For the IWM, upper right hand, the Q is the lower left, and the diamond's the lower right. Let's start with the SPYs real quickly. And as we take a look at it, you're going to see that it's trading right into the center of its weekly profile. It's tagged it. It's touched it. That was 246.22. If you see it close above 246.22, the reading on this is that price will go test the 247 level. That's the daily top of the box. The daily box is structured, has a bullish structure out here. So odds favor 247. Even Steven is really its next level. If you're looking to short this, then what you're looking at is probably the 248.01. So between 247 and 248.01, you'll want to take a look at volume metrics as price comes into the August 8th swing point, which has got 61 million shares. You're certainly going to want to see lighter volume out here. If we take a look at what, in fact, the SPYs did yesterday, August 21st, there was 65 million shares out there. That's our swing point low. We tested it yesterday with only 51 million shares. That's your classic test and rejection with lighter volume inside of the SPY out there. You can't bust them down. What has Tom taught us? You're going to go ahead and bust them to the upside. If you take a look at the IWM, you were talking about wanting to be able to short this out here. Well, the IWM right now today, if it closes above 137.88, that is the daily top of the box out here. That suggests to you that price is going to go run up to the center of the weekly box, way up in the 141.21 level. Could even get up to 143.24. So this is suggesting to you, hey, don't touch a short inside of the IWM just yet. No signal. If we go take a look at the Qs, maybe it's all going to be about the Qs, because the Qs are going to be the ones that are closest to being able to test the swing point. And that means test the high of that swing point. Why? Because we closed inside it. Now, that swing point had volume of 80 million shares. We're moving into it with light volume, as we did yesterday, only 24 million shares. But that 24 million shares was nothing more than a test and rejection of the August 21st swing point. So 144.94 is the level for you to be watching. In the IWM, I'm sorry, the QQQ, if you close above 144.94, volume or not, says you're going to go test the high. That high being 145.96. To finish it off, to cap it all, we're going to go take a look at the Dow Diamond. Struggling, yet today above the center of its daily profile. It's above the weekly profiles. What the diamonds, Lucy in the sky, are communicating to you and I is the diamonds want to get up to the 220.56. I've got news for you, folks. If, in fact, this is the outcome of the ETFs out there, one thing is for darn certain. This is not how tops are formed. Tops don't like to let you out. We're just going back and testing and testing and testing. And let's not forget, we're in the unfavorable seasonal cycle. Now, the only thing that I can say, Mick, is I will caution you with regard to utilizing the ETFs for the indices out here as being your sole source for determining whether to be long or short. Please, and I say please, go open up a Nadex account or something like that if you don't have access to the equity futures contracts. Learn Stevie's patterns out there, because it's going to provide you with way better, better information out there, because instead of dealing with 6 hours worth of information out here, 6.5 hours worth of information, you'll have basically the entire day. And that's what I want you to use, more information. So, Mick, I hope that helps you out. We were taking a look at other indices. I don't see any other questions that came in out here. Patiently waiting. That's a good thing. You got to be patiently waiting. And, hey, you don't want to be shorting a dull market. And I'm just trying to make this show as lively as I can in a dull market. And today is just simply proof that you don't want to do that. So we were taking a look at other indices. We were taking a look at the NASDAQ composite out here. Let's go see what else we can take a look at. How about the trannies out there? Should we go take a look at the trannies? Because if we take a look at the trannies out here, they simply provided you with a Gartley buy pattern when they formed this nice little bull sash. This is on the trading session out here. This is how the market really communicates to us, right? August 25th. You know, it just generates bullish and bearish reversal signals as a pattern is completing. And then on the very next trading session, price got up over Stevie's red line yesterday, follow through on that. So what you and I know with regard to the transports is they're headed where? The prior swing point. And that prior swing point out here, that's on the trading session of August 16th. And there's your shooting star. Now, if in fact the transports are able to take out the high of that shooting star, because that is your resistance level, and that high is 94.4761, Mick, you're going to have to sit around and be even more patient out there. If you're a believer that the transports would be communicating to you a very important message with regard to, hey, where is the Dow going? Transports looking mighty bullish out here. We'll know for sure when they get up and test that shooting star candle. What else we want to go take a look at? Let's go take a look at at what? What do we want to look at? The New York Stock Exchange. The New York Stock Exchange. We can't trade it, but we certainly can get good information from it. And we're right now in the process of the NYSE testing a key level of resistance. You don't need me to tell you what that is. But if you're not watching us on Tiger TV, it's simply Stevie's red line. If the NYSE closes above that, it's back off to the races, to the upside. Korea, North Korea, any kind of Korea, even Korea. See Rhodes, TFNN. We'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
From Hawaii 5-0, he's long Mankind at $1.69. Where do we see this thing going? I think is the question out here. Here's the daily chart for Mankind out here. And as we take a look at it, you've got this little swing point out here from May 10th. that it's dealing with. Now, that had volume, Dano, of 32 million shares out there. You don't have that volume today. Lightly traded, about 4.5 million shares. But, if you clear that, which it looks like it wants to, don't know if it will, just looks like it wants to. We just want it off of that wall out there. Well, then what you're looking at is probably a next target area, I would say, of the March 17th level, somewhere around 193 to 207. If I take a look at Mankind on a daily basis out here, certainly we could draw the A to B equals CD pattern out here. I won't. I don't see anything here on this chart that suggests, here you got a nice little shooting star back on the trading day of June 23rd. So as long as it stays above this high today, that high, by the way, was 159. You're at 187. It likely should. This thing looks like it wants to run higher. That's on the daily chart. If we go take a look at the weekly chart out here for you, see what we can find. Whoa. Man, Mankind has had a lot of trouble out here. In fact, let's come back to the weekly chart. Let's go see what we're looking at for you with regard to, okay, glad we did that. Thanks for asking. So on the weekly chart, 193, $1.93 is the top of its weekly box out here, right? So it's trading right now into that little resistance level. I'm not saying to sell it. What I want you to watch is $1.93. You want to see it close above that level, because that would be your indication that a change in trend has taken place from an intermediate term standpoint, because that, my friend, is the monthly chart. So I'm in your corner. I'm pulling for you for MNKD to close above, what was that, $1.93 come Friday afternoon. Folks, stay tuned, because your friend and mine, your favorite polar bear and mine, David White, he's up next because it's Wonderful Wednesday. That means we got Tom O'Brien from 3 to 5. Have a terrific day. Hey, I'm going to do my best to be with you tomorrow. I've got an appointment, and not sure if I get back in time. I'll do everything I can. But have a great Wednesday. Hopefully we'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Tom O'Brien.